All right, I'm here with SC. Thank you for agreeing to do this interview.
Oh, it's my pleasure. It's great to be here.
Yeah, appreciate it. Well, thank you. You're at TechCon and you're about ready to give one of our keynotes, and you're also on one of our panels. But before we get into that, I have to say I voted for your TechCrunch article.
Thank you.
I think let me see if I can remember it right. It was about the enterprise go-to-market is broken.
Yes, exactly.
Tell me about that.
So, essentially, every entrepreneur we talk to right now, I run a venture capital firm, so talking to entrepreneurs is my job. Every entrepreneur we talk to right now is saying, I need more customers. And the reason is after COVID, cold calling has stopped working because nobody goes to the office anymore. So there's no phone to pick up. And now with the AI hype, if you're like me, I get like 500 emails a day and I just delete them.
Yes.
So lead generation by email is also a dead channel. So it's like, if it's not coming from cold calling and it's not coming from emails, where is it coming from? So that's what I'm going to be talking about at TechCrunch. And thank you for voting for my session. I'm actually in the #1 position.
I saw that, yes.
Voting ends tonight, which is exciting.
Yeah, a couple of days ago when I was looking through the panelists, I looked you up and I saw that you were on TechCrunch. So I looked at that. I saw that you were up at the top, so I voted for it.
Thank you.
Yeah, you're welcome. That was fun. No, I agree. I think that in modern technology, I mean, how do you get leads? How do you go out and get new customers? Especially if you're a startup entrepreneur that's never really been in the sales arena. I mean, that's kind of you don't know what to do.
Yes.
Right.
And what's interesting is a lot of entrepreneurs are incredibly focused on their product, which is awesome. That's part of our investment thesis. But they think of their product as the technology as opposed to the product as in the need it solves for the customer. So what we're helping them do is take a product-first approach to go-to-market, which is essentially saying your product is only as valuable as your customer is using it.
Yes.
And so we look at helping them with the distribution channel, helping them with positioning. We help them build what I call the whole product, where maybe they do some partnerships or some small strategic M&As to really solve a problem end-to-end as opposed to just a point solution. We help them think about their business model. And then what's unique about Moatti Capital is we have a global community of 500,000 product managers. So they're across industry, across geography, and they're great advisors to these product folks, but they're also buyers of technology. And so they're a massive distribution channel for our companies.
That sounds like a lot of value that you're bringing to the people that you invest in.
Yes, exactly. $1 is worth way more than $1.
So you're with a venture capital fund right now.
Yes.
I'll have you talk about that in a second. But before we do, I've noticed this trend where people think that money is scarce in venture capital. I don't get that feeling. I think it's more like you have a lot of options. So make sure you side with one that can really help you.
Yes. There's a little bit of both. Right now, what we're facing is what's called the trickle-down effect, right? Like the stock market crashed, interest rates are high. And so when interest rates are high, the large pension funds, right, they will get good returns for low risk by just doing bonds.
I see.
Therefore, relatively speaking, an investment in a venture capital firm or in real estate is less attractive to them because they can get the returns at no risk. So in a high interest rate environment, they tend to prefer bonds over venture capital, which means that then venture capital firms have less money to invest. And so capital is harder to come by. But at the same time, when you think about it from the perspective of a venture capital firm, if you have X many dollars to invest, you're going to put more dollars on your winners and you're going to spread them less. Right? And so that's kind of why for some people there's a lot of capital and for others there's really much less capital right now.
And so you're really invested in making sure the ones you do put your money behind are really successful.
Are super successful, exactly.
Hence this need to help them in their go-to-market approach.
Exactly. And what we're finding is by taking this product-first approach, this is what I'm going to talk about in my keynote, we actually break the traditional VC business model, which is based on the power law. The power law is saying 1 in maybe 20 or 30 of my investments is going to be a home run and everything else is going to go to zero. And what we're finding is when we help entrepreneurs take that product first approach, we break the power law. 1 in 5 of our companies is a winner, which is
That's great.
4 or 5 times better than a traditional model.
Yeah, I know when I first got into investing, I heard them tell me this.
Exactly.
And I rejected that notion out of hand. I'm like, I can't afford that. I'm sorry.
Exactly. Why do that?
Well, why throw money away, right?
Exactly.
So that's very good. So tell us about the firm you're with.
Yeah, so I started Moatti Capital 6 years ago.
Okay.
And we invest at Series A in B2B tech.
Oh, wow.
We just finishing raising our third fund, which is $100 million. And so we build very concentrated portfolio. Every time we raise a fund, we invest in maybe 15 or 17 companies. We've invested in companies that have gone public, like Amplitude, DigitalOcean, Airbnb, although we don't do that much consumer at the moment. And we've also invested really early in AI. So we're investors in Grok, for example, before it became a hype. We've invested in on-platform also before it became a hype. And these are already winners in that sort of generative AI wave that we're in. And like I was mentioning to you earlier, what's unique about us is that we give access to 500,000 product managers to our portfolio companies. So they use that to sell primarily. They also use that to hire great product talent. And then occasionally they use that to sell their companies to like the chief product officers. We've had some companies do that successfully. So it's an exit path as well.
So I'm selfishly interested in that because I recently took over the CRO position at an AI company.
Amazing.
So I'm very interested in your opinion about what you look for in startups that are in the AI space. Because with us, there's like a sea of them coming in. Like
yes,
you probably get 10 of them a week.
Yes.
So what are you? How do you filter?
Yes, that's a great question. And you're right. There are so many AI companies coming. Like that community of product managers run awards every year. So we ask, 500,000 product managers, please nominate companies that you think are interesting, innovative. This year we received 6,000 nominations. 4,000 of them are AI companies.
Oh, wow.
So 67%. Last year, we've been doing that 7 years. Last year it was only 20%. And then the year before it was not meaningful. Like we weren't really tracking that. So that's just to give you a sense for the proportion. Now, what we look for is, number one is speed of execution. It goes so fast in that field. I have not seen, I built a name for myself as an entrepreneur product person during the mobile era. I have not seen innovation go as fast as now as back then in the mobile era, like 15 years ago. So that means serial entrepreneurs have a definite advantage compared to first-time entrepreneur. And then the second thing is this product a must-have, right? Is it going to be sticky? Does it have a business model that has sound unit economics? Just like in a sense, any other company. And then once you go through all that, which eliminates many companies, then it's a question of valuation. And the valuation is inflated, as everybody knows. The question is how much inflated? Because if it grows really fast, the company can, grow into its valuation up to a certain point.
So you're really you're taking a look at the team and deciding, does this team and their technology, are they really going to get that fast? Are they going to grow to that valuation as fast as we want them to, right?
We look at 3 things. Yeah. Team is the number one, then traction, and then terms.
Okay. Terms always.
It's always important. And then the last criteria is the fit with us, right? Because if they're selling their product to any organization like engineering, marketing, analytics, design, sales, product, then a product manager or a VP of product will have a say in their sales process at their customers. And so we can help them, right? They'll either be a buyer or they'll be a champion or they'll be an influencer. And so we can help them. And so the fit with us, right? Can we accelerate their success is also an important criteria.
Wow. Pretty interesting. So you seem like you're really connected in this world, which is exciting. How did you get here?
So my background, I grew up in Paris, in France.
Okay.
I studied electrical engineering. And then right after that, moved to the Bay Area. I was at Stanford for my MBA and then was an entrepreneur and product manager for a decade.
Wow.
I told you I built my name during the mobile era. And so at the end of that, I was invited to write a book on what makes a great product.
Okay.
And that's when I started to do some angel investing and to organize events around that book, which essentially is the community that I built, that's how it started. And those product managers were bringing very interesting investment opportunities. And so everything became a bit of a kind of virtuous circle of great product managers starting or joining great companies, which became my investments, which is why I started Moatti Capital. And then that community is the non-for-profit. And the mission is everyone can build great products. So all the programs are free and available to everybody.
Yeah, we could probably talk about that for a long time, but I saw that you have a foundation that's helping product managers move up in leadership. Is that
Exactly.
the idea? Did
That's
I get
exactly
it right?
What the goal of this foundation is to help everyone build great products, and doing that requires, basically product managers to become literally the most important function in business. So that's what we're advocating.
Well, it's nice to meet you today. Thank you for coming to TechCon.
Thank you so much for having me.
If one of these aspiring product managers would like to get a hold of you, how do they do so?
Yeah, so 2 ways. If you're a product manager, you can join our community. It's completely free. All the programming is completely free.
Okay.
Productsthatcount.org.
Okay.
And then if you want to get a hold of me, first of all, I'm on LinkedIn, very easy to find. So please connect. And then if you want to email me, SC, just my initials, at moatti.capital and no.com.
Yeah, that's Moatti Capital.
That's right.
All right. Well, thank you very much.
Thanks for having me.
All right. Thank you for listening to this episode of The Founders Journey. You can follow us at foundersjourney.fm for updates on our episodes and to recommend future guests. Special thanks to our primary sponsor, Newfund Venture Group, who can be found at newfund.com.